What is up, people? Welcome back to the Capitalist Investor YouTube channel. My name is Ben, and on today's video we're going to talk about how you can read financial statements. And no, you don't need to be an investing genius to be able to read them. For those of you that are new to the channel, do make sure you smash the like button and subscribe so you get more content from me on the weekly. Okay, let's get into today's video. So if we just minimize me down so you can see me, but you can also see what I'm doing on the screen behind. We can see that I am currently on the Companies House beta website, as you can see here. And effectively on here you can search for any company that is UK registered and has to file accounts. So we're going to just type in here free trade and away we go. Obviously it pulls up Free Trade Limited. Then we're going to look at so this has a lot of information on here just for reference. You can look at when they need to file their next accounts by and when their last accounts are made up to. But the key area, if you want to look at some financial statements, click on filing history. Then you want to filter here by accounts. And that will pull up the filed accounts that the entity has made. This date here is when they filed them, and obviously this is when the period for which we're looking at. So Free Trade last filed their accounts on the 22nd of June 2020, and these were their September year-end 2019 accounts. Right, let's get into it. So these are the Free Trade financial statements that we're going to review today. I'm going to try and make this as quick and as fun as possible, if that can be the case for reviewing financial statements. But yeah, stick with me. I'm going to skip through some of the boring stuff and yeah, talk about the things to look out for when reviewing financial statements. So first page you can pretty much ignore, just obviously tells you the name of the entity, so do double check that's the entity you're trying to review. And obviously the year end tells you how recent these financial results have been posted. We then have the company information, which doesn't really tell you much more than who the directors are, where this place is based, and who the independent auditors are. If you don't know what independent auditors are, they effectively go and check against what management have put in these financial statements and say, yeah, they seem right. Now I say seem because they don't check every balance, but they are supposed to verify that these accounts are true and fair. So yeah, do check out them. Especially if they're PwC or KPMG or EY or Deloitte, because they're the big four and they're the ones that you see in the news headlines saying did not do their job. So yeah, check those guys out. So then we have the director's report, which in effect does have lots of boilerplate wording in here which does not mean anything, but do check out, you know, what the entity does, whether it's public or private, whether it's got a profit or loss, and whether they've paid any dividends, because we are dividend hunters, remember, here on this channel. One other area that is particularly interesting would be the financial risk management. Here they've not actually listed out what their financial risks are, but they have done in note 18, so we'll come on to that shortly. But yeah, usually entities will put in here what they deem the risk to be to the business, and obviously as a shareholder that's the risk that you will also have to the business. Lots of this is just standard wording, so we're going to skip through that. Then we have the independent auditor's report, so be careful here. You want to check the basis for opinion, which might be a disclaimer or some sort of emphasis of matter that they've not been able to conclude on. They will obviously report that within their basis of opinion. If they have issues where the business may not be able to continue, they're going to put their issues in this going concern pit here, where they're concluding that the entity can continue to operate. If they say otherwise, panic, guys. Other than that, there's lots of wording in here that doesn't necessarily mean much, apart from the fact that it's been signed off by a third-party independent auditor, which in this case is PwC. We then have the income statement, which is effectively all of the activity that's happened in this year and whether this entity made a profit or a loss. Here we can see Free Trade generated £86,000 revenue and made a loss of around 3.5 million. They also didn't pay a dividend. And yeah, there's not much else to say in here. There's nothing in other comprehensive income. So yeah, 3.5 million loss on the P&L. The balance sheet looks at a point in time, unlike the income statement, which covers the period up until from September 2018 to September 2019. The balance sheet looks at what they had on their books effectively at the end of September 2019. So this will tell you what cash they're currently holding, how much they're owed by other people, what they have in terms of fixed assets and intangible assets, so assets that they have that are generating money for the business, how much they owe to other people, and what we call net assets, which is effectively your share capital plus your share premium. Then you've got other reserves and you've got your profit and loss that you're accumulating each year. So what you'll see is the difference between this number and this number is the loss that was incurred during the year. This is then signed off by the director again to say, yep, this is the balance sheet of the entity that we have approved. You then have statement of changes in equity, which will tell you anything that has happened within the entity that has not gone through necessarily the P&L. So that could be new shares being issued, that could be share-based payments, as you can see here, but it also could be a dividend being paid or being received from another entity. You've then got the cash flow, which gives you an insight into what this entity is doing in terms of generating cash, but also spending cash. And there, how does that look throughout the year? So here we can see actually they generated, they paid out 3.9 million of cash through their operations, which is basically buying and selling things. They've purchased a bit of fixed assets, a bit of intangibles. They got some money in from issuing shares, and they basically got an increase of 671,000 to their previous year's cash balance of 2.7 million. So yeah, pretty decent. They're getting cash in, right? Then we go on to what we call the notes to the accounts. Now, note 1 is always going to tell you the basis of preparation and different policies that they have in place for different parts and pieces of their financial statements. So usually there will be a heading that covers each of the different elements of the financial statements and telling you what this company's policy is in relation to those. It doesn't really matter that much, and there's not a lot of detail that you can get out of them. They're often very bog standard wording, accountancy concepts that to you and I probably don't necessarily matter. So let's move on to a note that actually does mean something. Auditors' remuneration. So how much did the auditors get paid? £96,000. Yeah, that's pretty good, but for a business this size, that's probably what I'd expect. Not really much more we can talk about here. But what we do get here is the operating expenses, and we can see how the business has been doing year on year and what it's spending its money on. So quickly looking at this, we can see they have ramped up their employee costs, they have ramped up their advertising, and it looks like this company is looking to grow, which is obviously what we know free trade is trying to do. It's in a startup phase, so it's going to be spending significant amounts of money on advertising, employees, rent for business places that they're getting. So nothing in there surprises me for a startup business, but you can find out a lot about a business within its operating expenses. You can then go into deeper detail around the employee costs, and we can see here that actually the employee costs have increased by around £800,000, and that's just wages and salaries. So what I'm expecting here is the headcount to have increased, and lo and behold, you can see that the number of permanent employees, excluding directors, was 45 as at September compared to just 11 in the previous year. This entity is definitely a growth startup entity. You then get to find out a bit more about the tax. If you're interested in tax, I mean, I'm not personally, but obviously if they've generated a loss, they can get some tax credits, which they've got here through R&D tax credits. So effectively they're not going to pay any tax on a loss, are they? But they can obviously reclaim tax if they've spent it on eligible items like R&D tax credits. You can see at the end of the year they had 411,000 outstanding from reclaiming corporation tax, which would be in relation to that tax balance above. You've then got your fixed assets, which is property, plant and equipment. They've split that into two categories: computer equipment, office equipment. And yeah, there's not much really to talk about here. There's obviously spent a reasonable amount on these. You have what's called depreciation, which reduces the balance, and the movement in depreciation gets posted to your profit and loss as a charge, so it goes against your revenue. And yeah, we can see that obviously that balance has increased year on year. Same thing with intangibles. Now intangibles in this case will be the software, which I'd imagine will be behind the application that you all use when you sign up to Freetrade. They've obviously built that in-house and therefore capitalised that as an intangible asset on the balance sheet. No investments in subsidiary. It looks like they disposed of an investment, which you can then read about in the box underneath, which will tell you what that investment was. So it looks like this was in relation to an Italian subsidiary, so Freetrade Italia. Not heard of that before, but effectively disposed of it, and a loss of 28,000 has been recognised as they wrote off 4,000 of that. Then obviously you can see the split between the trade debtors, so what people owe us, and here we can see obviously there's that corporation tax that we were talking about before. We can see some of the other stuff that we have receivables for as well. Cash is just cash at the bank. We then have creditors, which would be what we owe other people. Nothing too untoward here, so we're going to skip over that. We then got lots of information around shares being issued, and I guess whether there were new shares being issued. Now, Freetrade did actually issue more shares through a CrowdCube share raise effectively. So that's where a lot of these additional shares will have been obtained from. And I expect next year's to include a large amount of shares also, because they did another round of, I want to say fundraising, but it's not fundraising. If you know what it is, just hit me up in the comments below. I'm sure it will come back to me after I've recorded this video. Then you've got share-based payments, which are effectively incentives to directors and employees to hit a certain performance level of the business or hit certain targets that are dictated to them to meet the criteria. We then have cash used in operations, which is effectively a reconciliation from the loss before tax, taking out anything that's non-cash related. Nothing too interesting there. You then get what's called related party transactions, which are basically transactions that have happened where effectively the director has maybe bought something from a company that he's also a director for, or done something with other entities that he is a director for. We can also find out some more information around the remuneration of these directors. So we can find out about how much the total pay for the directors was. We can find out what the total pay for the highest paid director was. So one director at Freetrade earned £142,000 in 2019. Pretty impressive. I mean, yeah, that's definitely impressive. So yeah, we can find out some cool information about them. We've then got operating lease commitments, which is effectively what the entity is committed to in terms of paying out for. So typically this will be like rent and any leases like forklifts or cars or properties, the main thing, to be fair. Then you've got the risk management, which is what I spoke about earlier, to find out what the entity deems themselves to be the risk towards the business. So here they've interestingly identified liquidity, but also capital risk management, as obviously they are safeguarding the money that we put into the app. Therefore they've got specific obligations under FCA to make sure they look after that money and don't do anything with it that would put us in trouble, basically. Events after the reporting period would usually declare any sort of dividends that have been paid or any acquisitions or disposals after the end of the 30th of September 2019 in this case. In this case, it looks like there was some sort of agreement to purchase 𝕜𝕟𝕝𝕒𝕝